time, let's go to question number 2. And this comes from Scott. And Scott says, I've been meaning to write this question to your firm. I've listened to both of you for some time. This is unrelated to the options to some degree. Perfectly fine. He says, when Ernie spoke with me previously on a coaching session or via email, his opinion was using Bollinger Band 20, 1.5 width, I think is what he means here for the Bollinger Bands. Volume for the stock, MACD. Now, so many places have all kinds of fancy indicators. You've got your Fibonacci, you've got on-option volume, you've got dozens and dozens of things that you can use. And he says they provide lagging statements that support the money that can be made by using their special program. There's some that sell specifically against a technical indicator and some other things along those lines. But Scott continues on with your and Mike's experience, which indicators are, in opinion, the best to use? And I got to say, most of what you hear from me, most of what we talk about in discussions and things of that nature comes from me standing on the shoulders of giants. And that giant is Ernie, of course. We go back and forth. We have different ideas for our accounts. One reason is because I'm in my 40s and still can take some chances and still have income coming in. He does as well, don't get me wrong. But he's in more of protection, whereas he's using 80% of his portfolio in married puts. I'm only using about maybe 45 to 55%. I'm still trading some riskier credit spreads, other positions of that nature. Oh, hold on, folks, I apologize. But yes, I'm still trading other strategies that take on a higher risk with a larger portion of my portfolio because I still have more time of disposable income to make that back if necessary. But I'm very conservative because I didn't do this to become an overnight millionaire, and I would never promise that to any of you. And of course, if you're online right now looking how to trade options to become a millionaire in the next month, 2 months, or 48 days, well, I'm sorry, you are in the wrong place because I'll bore you with protecting against the lie of leverage and gambler's ruin. You'll also stay in the game longer if you listen to us more frequently, but I am not going to lie to you, and I'm not going to blow smoke up somewhere about, oh yeah, you can turn your $100,000 account into $1 million in the next 6 months. No problem. There's a problem. But in any case, let's get to Scott. All right. Now, you already saw some of it. We looked at that AbbVie position for a previous discussion. And you saw the chart and mentioned that my save preferences are looking at a 3-month chart, usually when I'm looking to open a new married put, new bull put credit spread, calendar call or diagonal spread, which we're going to talk about in a moment. Bollinger Bands. I originally didn't pay too much attention to this, but over the years, with discussions with Ernie, with what he was testing to set up for his long option searches, the Bollinger Band default searches and power options, I started to see more of a guideline for that as well. Simple as it is, the SMA 20. Not by itself, but in conjunction with the MACD. And then sort of my tertiary indicators that I look at a lesser value are RSI. But yeah, volume and strength of volume is something that you like to pay attention to too. But those are secondary occurrences for me. Down on the third level, lack of a better term. Now, what we want to do, of course, let's head over to Power Options and look at a few, I'm sorry, folks, look at a few more of these. This thing's being weird. Sorry about that. Take a look at a few charts there and what we might see and what we might look for and why I use those. Does it mean they're the best? No. Are there other indicators out there that probably have the similar performance, similar lagging or near not as lagging trends as what I tend to look for? Absolutely. It's tough, but you've got to find what works for you. I feel I've found what works for me with the strategies that I use, Scott. And that's why those are my defaults. But again, let's go ahead now and let's take a look back to Power Options. And what we're going to do, of course, is we're going to pull up AbbVie again just from the start. And I'm just going to go to the quotes page. It shows all the detailed stock quotes that we have, stock data that we have for AbbVie. But at the same time now, I'm going to use the More Information button. And we want to go to Charts, and we want to go to Big Charts. As I mentioned, here are my save settings for Big Charts when I link to it from Power Options. As we mentioned, we're just looking at a standard 3-month chart. And the reason why is because most of my positions are looking, the short-term trades selling is usually 2 to 3 weeks out in time. Yes, the married puts are longer term, but I usually am only in the positions for maybe 4.5 months, sometimes 5 months. But even though my put's out 210 days, I usually don't hold the position all the way to expiration. Yes, my calendar spreads might be 4, 5, 6 months out in time for the long option, where I'm selling nearer term calls against it again that are 2 to 3 weeks out in time. And that's why the SMA 20 comes into play. The setting here, I've set it to be SMA with 20 days in the box, and that's this line here. The upper indicators, that's our Bollinger Band. This is our upper Bollinger Band. Typically what you look for is a Bollinger Band breakout. Now, it's not guaranteed, but that's one thing that Ernie likes to look for. What is a Bollinger Band breakout? Is when the stock closes above the upper band and then the next day also closes above. You usually see a little hesitation and then increase up in price. I'd look for that on the reverse side too. Negative Bollinger Band breakout to the bottom, where the stock closes below the lower band one day, then closes below it again the next day. You might see a little force up, short sale covering perhaps, but then you usually see a decline. But other factors come into play with that. And as I mentioned, we look at the other factors with the RSI and the MACD, but mostly the MACD. So when I see a negative crossover here, the stock hasn't really dropped below the SMA 20, but here it is dropping below the SMA 20, and we're starting to see a movement downwards with the MACD. Now, if I'm in a married put position or a long call position, this might give me time where I say, hey, I'm starting to see this. I'm starting to see the trend change. Maybe I do want to sell a call up here because I'm expecting a little bit of a decline, but I'd really like to see the lower Bollinger Band. Am I missing the decline from maybe this price here at the peak? Possibly, but what's 2 or 3 points, Scott? I'm not day trading. I'm not trying to find the perfect entry. One of the benefits of the married put position, as Kurt always says, don't time your trades, trade time. You're trying to trade weekly spread positions, weekly covered calls, short term, 3 days out, 4 days out, 0 days to expiration. Yeah, this type of settings and these types of technical criteria might not meet your timing needs. I understand that. What Ernie and I state when we're looking at these views, when we're looking at the Bollinger Bands, when we're looking at the MACD, we're looking for the breakouts, it's for things that we're planning on being in. Even in the shorter term, 2 weeks for a credit spread or debit spread perhaps, but more longer term, married put position, maybe a 2 to 3 week out covered call, or out of the money cash secured put, a 4-month out or 3-month out at the money debit spread, a diagonal calendar spread, quote unquote, poor man's covered call, further out in time. But we use these just like we use the market sentiment tool. When I see trends shift, that's going to guide me to what am I expecting. Now here's a negative MACD crossover, but the stock didn't really drop below the SMA 20. It never really closed below it. It's in more of a hesitation period. And here, how else can you use the Bollinger Bands? Well, it's starting to have that condensing. When it had that condensing shortly after, it closed up. See a positive MACD. Bollinger Band breakout here. This would have been a good entry point at 170. Did I miss it at 165? Yes, because I wasn't sure yet. This might have continued to move down in price if it did close below the SMA 20 in that case. Ernie might have a little different view of how he uses the SMA 20 in conjunction with the MACD, but this is typically how I use it, in conjunction with the Bollinger Bands, in conjunction with that. Now, let's take a look at some other securities, of course. I had mentioned earlier during the AbbVie discussion, we mentioned AMD. Sorry about that. And I'm going to go back to a 6-month chart for AMD. For the married put position, we got back into AMD when it was back around 96. It was back down here in December-ish. I think it actually was over here, if I'm not mistaken. And yeah, I think it was. We had the run up, and then the stock pulled back to this level right about there. Why did I get into it back here? Positive MACD crossover. Started to cross above the SMA 20, but looked like it had hit a bottom on the lower band. It didn't close below it. It stayed above it. It sort of bounced off of it and just showed the positive MACD crossover. I thought that was a good entry point. I actually rolled up the put, if I'm not mistaken, here when the stock hit to 110, because I think I had the 105 put initially, and I moved it up to the 115. Then it pulled back. What was I able to do? I was able to move the put back down to lower my cost basis from, yes, where I increased it. And then, these things happened. I think I got out here with a short call. Actually, I think my short call was at 140. We got assigned when the stock's at 150. I didn't want to buy it back, but I was okay with that at that time. Throughout the trade, though, Scott, what do we see? After that inflection point, that lower end, we're riding the lower Bollinger Band, move up here, and the stock has what? It crosses above the SMA 20, doesn't show us a Bollinger Band breakout, but we have that positive MACD effect. We're moving up here. What was done here would have moved the put back up in price as it started to move back up with the positive confirmation of what we're looking for. And we have a little hesitation here, but it doesn't really pronounce itself. Of course, I'm in a married put, so I'm not doing a day trade saying, oh, I got to swing this down and move this up. I got to go further out of the money. Oh, now it's up here. I got to do this in the next 2 days because I'm 1 day away from it. That's not what I'm saying, and I understand that. You're looking for more detailed explanation for swing trading, intraday trading, maybe even using shorter term weekly trends to find what is the 15-minute, what is the 10-minute, what is the 20-minute. That's not something Ernie and I do. Okay, we don't know the references of who gives the best advice in those scenarios for those shorter term trades, daily trades, intraday markers, and things of that nature. It's not something we specifically use. And if we do use it, it's very fleeting. It's on a lottery trade, right? We might have bought one contract or two contracts of a call or a put or a straddle, and we're just trying to time the exit. But in general, our positions are longer term. That's why we use these indicators. We look for those movements, just like we use the market sentiment tool, not necessarily to adjust the position on the fly, not to react every time we see it, but as a confirmation of a warning sign is, hey, something might be breaking down with this position. I'm in bullish position X or bullish position Y on this trade. What might I like to do in that position? I'm in bearish trade B or bearish trade C on this position. Now that I'm starting to see some change in this position, some change in the positive signatures that I like to use, the technicals I like to use, what might I start considering as a way to adjust it or management if the need arises in those cases? And so that's what I'm going to look to do in that scenario. And that's why we use these indicators. Now, I did mention that I use RSI as in a case, a tertiary indicator. I'm not one that follows it and says, okay, so when I got into this trade here, hey, the RSI was below 50, that's pretty good. But at the same time, I saw a positive MACD crossover when the stock was strong, and let's say the RSI was at 60, is that going to negate me from entering the position at this point? No. I'm not going to be overheaded. If it was at 90 or 100 for whatever reason, I would. But the two wouldn't be working in conjunction in that fashion. Okay? It would be a lower range in that case. If this was, we'd been moving up, so the RSI wouldn't have been, down into 30. If you're looking for positions that have been uptrending and been above the 20-day moving average for 10 or 15 days, and it just had a positive MACD crossover after a recent downturn, your RSI is still going to be 60, 65, 70. It's not going to be 10, 15, or 20. Okay, that's very, very rare. Down here, it was closer. I agree. We were down here, but we're still only about 40, 45 or so, not down to the 30 range. Okay. And it's more of a tertiary indicator, not directly. I do want to see strong volume when I open a position, an increase in volume when I'm opening a new position, but it's not necessary as long as it's not blatantly low. At a point where I'm looking to enter the trade, I'm quite okay with that. Okay? But again, am I the best technical trader out there? Absolutely not. Am I the best stock picker out there? Absolutely not. But I tend to be right in the percentage range I needed to match the strategies I'm doing for my personal goals. Ernie's outlook would be the same. I think Ernie's discussion would be the same, Scott, in those scenarios of what we look for. And again, you can see that directly in Power Options in most of the screens as well. Let's just take a look. Let's go back to Power Options Home. I'm just going to go to the search for bull put credit spread. And as you've heard me say before, my preferred default, the weekly bull put one, the one that I've tested, the criteria that I use when I'm opening the bull put credit spreads, What do we have in the technicals in addition to the option criteria? Well, I don't have anything in Bollinger Bands, but again, stock above the SMA 20, and I'm looking for a positive MACD signal of at least 3 days or more. Ernie's preference for buying the calls or buying the puts, his default criteria that he has in the search. That default, okay, that was for one of our webinars. This VIX is a volatility hedge. But the Bollinger Band breakout default screen, what is he looking for there in the technicals? Bandwidth of less than 30, so a condensed bandwidth where the stock has recently closed, currently above the 20-day band, and the day before was below the lower band. He's looking for a recent breakout with the stock in an uptrend. Okay, and he doesn't have any MACD on this one, but I think he has it on the other longer term screen. See, these are shorter term, 21 and 35 days, looking for that distinctive breakout. A longer term growth Bollinger Band screen that I mentioned, you're looking 98 days, 126 days out in time. In the technical, let's see if I'm right or wrong. Percent BB20 upper band greater than 95. I thought he had a MACD here, but he doesn't. I think I put mine in addition to that with this default that Ernie has. Something, just a slight adjustment that I make on those, Scott, for my preferences. Again, our preferences, but that's how we set up the charts. That's how we have the charts located. And so that anytime I'm looking at any position, when I go to charts and we go to big charts, what am I looking at? 3-month chart using a simple SMA for the 20-day, Bollinger Bands, MACD for the lower indicator 1, RSI, and the volume. You know, there's other things that you can select: volatility, fast or slow, Williams percent R, stochastic. I know is a popular one of some of our power options users. I found what works for me, what works for my strategies, and that's why you hear Scott, Ernie, and I say pretty much the same thing when you've got us on a coaching session, when you've got us on the phone, when you're on a webinar with me, you see the same charts over and over, because that's what it looks like. That's what I've selected for my personal experience, and that's how we teach it, how we use it. And you want us to expand on that anytime, of course, as always, you can just feel free to schedule a coaching session, give us a call, or let us know.